for context.
Yeah.
It was one of the happiest I've ever been. And it taught me a lot about deferring gratification, focus, hard work, obviously putting yourself into challenging situations.
Mm-hmm.
And when I went to college, I didn't go run. I went to a Division I school just based on where I wanted to go geographically, and took some time off running, and have been not running basically since then. I've just been working out, training, doing some CrossFit style stuff.
Yeah.
And I suffered an injury in my left wrist that I basically had a fractured bone in my wrist for several years, and it prohibited me from moving my wrist with such inflection that I could do a push-up. So I couldn't do a push-up. And I wanted to learn Olympic lifting, and I started to get more into CrossFit.
Yeah.
And so because I couldn't do a push-up, I certainly couldn't do any overhead anything.
Mm-hmm.
So I basically went to a couple of surgeons, and they said, look, we can give you more flexibility, but like, do you really care that much about like doing a push-up? Like, does this actually matter to you? I'm like, yeah, like it totally matters. Like, just imagine if I'm like LeBron James, like it's worth it for me. Like may not matter to anyone else, but it mattered to me if I can do a push-up.
Right.
I'm 35, whatever. So most of the surgeons said it's probably not going to be worth it just to go through all that, but you'll probably be able to do a push-up at the end, especially if you're willing to put in the work with physical therapy. I'm like, okay, well, your boy will put in the work. Like I'll put myself through hell if it means this.
Yeah.
And so I got the surgery, and the results were pretty catastrophic. It was nowhere near what I anticipated. And I was with one of the best surgeons in the country, person that's worked on NFL players, NBA players, et cetera. And not only did I not get additional flexibility in my wrist, I lost about 40% of what I had. So for those that are listening on audio, this isn't really going to impact you, but if you can see, so this is my normal wrist.
Yeah.
This is as far as I can push back my other wrist.
Wow.
So for those that are listening, I basically have no ability to bend my wrist at all.
Your hand was straight up and down.
Correct. So for someone that is dedicated to lifting, for context, I can no longer hold a 25-pound dumbbell over my head. Jeez. So this was a pretty catastrophic moment. And we're going to tie this into all the things we're going to talk about. Basically, I went into physical therapy thinking I can overcome this. I can put myself through hell. And I did. Mm-hmm. I put a ton of stress on my wrist and put myself through real serious pain and anguish for about 90 days before I realized with enough time, perhaps I could, but I mean, I'm going to a level that almost nobody other than a professional athlete would go to. 45 minutes a day of just really serious pain. And it wasn't even getting close to me because there's certain levels, right? Either you do a push-up, overhead stuff. It wasn't happening. So I had that realization. And I realized, I always wanted to run a marathon.
Yeah.
And to kind of get my mind off this, I looked at the calendar. It was 12 weeks until the marathon. I had not been running, but I had a background running and I know how to train.
Yeah.
And so I took some steps, including, raising the stakes. I told everyone about it. I got a coach. I got an Olympic trials competitor, which is very inexpensive, by the way, on Instagram and internet and such. I went from running none to running 4 days a week to 5 days to 6 days, was right on the verge of what I was capable of genetically in that time period, and ran a 3:10 LA marathon, which is an average of 7:15s per mile. And
that's awesome.
Right. Exactly what I wanted to do. And I mean, I do have a little bit more genetic potential than that, but just given the time period, I know for a fact that was right at the limit of what I was physically capable of. And it was one of the coolest experiences of my life. So I don't know what part of that stuck out to you, but that's kind of my story.
Now that you repeated it, here's what I remember hearing when you were describing it, and you went on record. So there was a few things that I really appreciated. Number one, you publicly announced that you're going to do it, right? And I think that that's really important for anybody that's going to set goals, right? And the second thing was your commitment to hiring a coach, right? Because I think a lot of people, they set goals, myself included, right? We set goals and we say we're going to do something, but then we don't actually take the necessary steps and make those kind of, whether it's a financial commitment or whatever it happens to be, that's going to really force you to complete it, right? And to run a 3:10, I mean, that is you're obviously a pretty fit dude to be running that. But let's face it, a marathon, a lot of things can happen out there. And so to run 26 miles at that pace is that is impressive. I was hoping you weren't going to say such a quick number, but anyways.
Well, let me add some context to
Sure.
that. So I think a lot of people, when they hear that, and this is true in business and this is true in myself as well, we're always looking for excuses.
Yeah.
And so what happens is, I'm not saying that you're doing this, but I do this as well. And I'll give you an example of myself doing it. But especially when it comes to athletics, the genetic component is obviously very real, but the marathon, you can get really far in the marathon without having genetic limitations be part of it, because it's such a grind and it's all about dedication, and it's not about VO2 max, which is really where at an intermediate marathon level, which I think that would kind of be in, people that are far less genetically gifted than myself can run way faster. I know a couple of people that I ran with in high school that were not on my level. That I know a gentleman that ran 6:20s. I think that's 250 or something, 250 or something like that for the marathon, which is like a whole different ball game. So my point there is that whenever you hear something like this, and this is really true in business, you always want to come up with the reason why you can't do it and why it doesn't apply to you. And so, but the crazy thing is, that's absolutely true with me as well.
Yeah.
So like every athlete, entrepreneur, et cetera, there's levels to this game. And so I was coached by a female that ran 244 and qualified for the Olympic trials.
Wow.
And so, of course, what am I thinking? Oh, well, that's like different. She's like gifted. And then she's got these people that are, Bridget Kosgei, who's set the women's marathon record, I think at 214. She's probably thinking the same thing about her. Yeah. You know what I mean? And Bridget Kosgei's like, yeah, well, I have the Olympic record and the world record, but I only held it for 3 years. And there's this other person that's like on a whole different level than me. And so the cool thing though, is that in business though, this stuff is eliminated. There is no comp. There is no ceiling. And it just unlocks this whole new potential of getting rid of excuses. And of course, people come up with excuses as well. Their parents are wealthy. They're born in a first world country. All that stuff is totally legitimate. It's real. Mm-hmm. But the ability to overcome those things and like put those things behind you where it's like not even a factor. I mean, pretty much any successful person that you would mention, most of them came from a pretty challenged background, especially those that are inspirational, because that's why they're inspirational. Tony Robbins used to live in a car. A lot of people build businesses in their garage, and you just see example after example. And you think, you know what, maybe I can actually do this. And so,
well,
there we are.
We'll transition now into kind of real estate, because one of the, I think it's in your book, and I've heard you mention it in the past, where you put on an event or a seminar or something to that effect, right? Where you were raising capital for the first time, and you had kind of 30 people that were in there. I'm getting some of the numbers wrong, but the premise is accurate. And at the end, you kind of called for people that were interested to invest, to either kind of write something on a piece of paper. And you were pretty jacked because these were people that kind of knew, like, and trusted you, and you raised like nothing in that event. And when I heard that, I thought to myself, like, how many times do I come out of a meeting and it doesn't go quite the way that I wanted, but to have it on scale like that and to kind of bounce back, like, what was the mindset that you had, or how long did it take you to kind of say, you know what, this is just a process, I'm going to get through this? Like, I'm really curious, like, how you thought about that, because that would be some people would just give up and say, this obviously doesn't work. And you didn't.
Well, everybody has their own strengths and weaknesses as an entrepreneur, and even not as an entrepreneur, everyone has their own strengths and weaknesses. And so you got to be cautious about that and knowledge about that and double down on your strengths. So for me, one of my strengths is like this insane and delusional optimism. So when I get 30 people in a room, I'm texting this girl, Chrissy, at the time, who was my friend I was trying to impress, I'd later go to marry. Hey, there's $30 million in this room. Watch me work, basically trying to imply like, hey, look, I'll take care of you later. If we get like together, maybe you can take some time off at the end of if we have family, whatever. Like, these are the things that are implied in that text message. Right. And so what ends up happening is I get completely blindsided by the market that says like, we don't care. And so as someone who has this insane optimism, you get blindsided all the time. People that are pessimistic are like, I'll probably give this presentation. It's not going to work. They're more prepared for that. For someone that's delusional, you get like, what happened? And so I recognized that, was really embarrassed, and sat and basically moped and cried for a while. Cause I had, like you talked about with the marathon, I had told everybody, watch me raise my first million. I'm raising the stakes. I'm shortening the timeline. I have a coach, all this stuff. And then it fell super, super flat. But eventually I kind of gained that confidence back and spent the last 10 years going from, struggling to raise $500,000 or $1 million to raising 5, 10, 20, 50. We've raised $10 million in like 60 days from the comfort of my home office. And it's because we had, a playbook for our success, operating partners that work, and, an investment thesis that's been proven quite accurate over the last 10 years.
So this is something that I get asked quite often, which is like, how do you raise money? And for me, it's difficult because I have the benefit, and I think it's important to kind of tell people where you come from, right? And so for me, when I did residential real estate, I raised money by myself, usually from friends and family. But then when I got into the world of commercial real estate, I really learned it from my father-in-law. And I got plugged into a network that not many people would have access to, right? And so I appreciate and acknowledge that. And it's been obviously, very fruitful, and we've done a lot of things. But for people that don't have that, which is your situation, like what, maybe just give, like, I know we could go down the rabbit hole and you could get Hunter's book and he goes into depth, but just give like kind of a Cole's notes, if you will, of how you raise money. And then now I believe you actually do funds, and I wouldn't mind talking about that. And then we'll even get into some of the minutia of the economy and where you think things are going.
Sure. Yes. So first of all, I had a little bit different of an experience. I came from a great family that, I didn't have to worry about paying for things. I was able to go to whatever college I wanted to. So I'm very, very blessed in that regard. Mm-hmm. And because of that, I thought this raising money thing was going to come very easily to me. And the reality was almost none of my friends and family invested with me. That 30 people you were just talking about that I just completely bombed, those were people that I had known for years. And I thought, like I said, there's this myth that if they know, like, and trust you, they will invest with you. Yeah. And the reality is know, like, and trust may get them in the door. But if you don't have an automated system and process to get them knowledgeable, excited, confident, create some scarcity around that opportunity, actually present the opportunity in a way that's going to make them move forward, you do not get the money across the finish line. Mm-hmm. And that's all that matters. Not to be crass, but if the money doesn't leave their bank account and come into your bank account, you cannot help them. Yeah. A lot of us make the mistake of getting into this business. We figure it out on our own. We uncover this thing, and it's like Inception. The idea is in our mind from our own fruition, and we want to replicate that in a 30-minute meeting with a bunch of people that do not care and usually are more successful than us when we're getting started. So what happened? Hey, I got this great idea. Okay, like I'm moving on with my life. So the way that we do it is that, I'm a big proponent of building up an online presence with the specific focus of what we refer to as the AENC system, which is attract, educate, nurture, close. And whoever can do this fastest can scale because of the way that, bringing in leads, and whoever convert them the fastest can get money in the bank account that you can invest in their company. And that's just how it works. And so you mentioned the podcast, for example. That's an incredibly powerful mechanism. And I have to convince you of this, of a lot of those things: attracting new investors, nurturing them as quickly as possible. And then later we talk about, providing investment opportunity and prompting them to move forward. So that's my view of raising capital. And like I said, we've raised close to $60 million. And we also have an educational side of our business. The book is the beginning of that. We have a very expensive mastermind for people that want to raise money. You can learn more about that, by the way, at raisingcapitalforrealestate.com/never-scramble.
Yeah, that's, so I just want to ask one thing on that. And this is something that I believe is a limiting belief even for myself. And that is, I've always raised money one-to-one, right? I've never put on a webinar. I've never had,
Whoa.
that is,
wow,
yeah.
dude, this is great news.
Yeah.
This is good news because if what you're doing is working now,
yeah,
you've got a lot of money on the table, which is amazing.
yeah. Like we just, closed up a recent, and it's not big. It's, call it just under $3 million. And it came from a handful of investors, but it was all kind of one-to-one. And I don't, now I'm not, I wouldn't say I'm like overly confident in public speaking, but I'm comfortable enough to get in front of a group of people to have a conversation. So
yeah.
Were you a public speaker before, or have you always had that kind of confidence to be able to kind of like to get in front of 30 people and ask for money? Like that's almost like stand-up comedian, like confidence level. You know what I mean? Like where you're, and maybe it's not. I'm interested.
So, okay. So first of all, this is really great. And I'm happy to talk about capital raising now. I feel like that's what you're most interested in. That's totally fine. As long as your audience is going to be interested in, I'm happy to focus on that, because what you just said though, is just like, I cannot but help but hear just the money signs that are in the business. If you're having success to the tune of raising millions of dollars on a one-to-one basis, what's possible if you implement automations and processes? It's literally like pouring gas on a fire, and it will not require more work. The difference between you raising 3 million and 30 million is not consequential. That's the definition of what it means to be scalable. And so we want to create something that's hyper scalable, meaning the difference between you serving one client and 1,000 does not materially impact the amount of hours you must work. That's why commercial real estate is so favorable, because you do the same amount of work if you have a 4-plex as a 400-plex. One address, one property manager, just the difference of 100 times the clients.
Yeah.
So as far as that's concerned, I just had actually at our mastermind, someone just spoke named McCall Jones, who probably no one listening to this right now knows, who focuses on this very cool thing called charisma hacking and charisma modeling. And basically, she has this premise that we're kind of taught that if you are uncomfortable in front of a camera, that if you just simply do it over and over again, that you're going to gain that confidence and you're just going to be great. And the problem is, you can gain confidence by just doing reps, but if you're doing the reps incorrectly and trying to model people that do not have your same style of communication across 3 different verticals, you're going to come off as inauthentic. So I'll give you an example. If I come on here, and she uses this example, so I'll do it. So if I'm like, hey guys, what you should do is like, garage sales. Like, you need to find stuff, you need to flip it on the eBay. You need to, like, okay, if I'm trying to be Gary V, like that's not who my personality is. And it's going to come off as like I'm doing an impersonation as opposed to being myself. Yep. And so what I've done, like to answer your question, how to get comfortable in crowds, is to find people that you really resonate with in how they communicate, especially when it comes to authority and asking people to make a commitment and to move forward, and model those people specifically and ignore the others. So if the way that, let's say, Tony Robbins would communicate would make you cringe if you thought about yourself doing it, don't do it. Just because Tony's successful doesn't mean that that's the path, because there's also Elon Musk. There's also Bill Clinton. Pick a vertical that you're like, that guy actually comes off authentic. And I also feel like if I spoke in that manner, I would as well. And so I found a couple of people that I could model.
Who? I'm curious. That was that was going to be my next question.
So this is going to be kind of a crush thing. And if he finds out about this, it's going to be kind of weird at our next meeting. Yeah. But let me just make a comparison.
Sure.
Just to provide context. So my first mentor was a person named Jeremy Roll, who you may know, very well-known passive investor, Wharton grad, probably a genius, got very good scores on SATs. And I just basically thought, if I could be 20% as good as him, we're going to be having a party. Yeah. But then I met another mentor. I'm not going to mention their name, but very tall person, physically, a professional athlete, as a background, very different charisma, spoke just with such presence. The being 6'7", by the way, helps the presence, but like such impact in the way that he speaks. The way that he speaks attracts massive, ultra high net worth people. He's a very crazy network. But I also wasn't him. But at that point, I realized this charisma style is not indicative of how successful these people are. They have very different approaches, perhaps I also can be myself and I have a spot in this business. And so the person that I mentioned, though, that I think that I can model the closest, Neil Bawa, is someone that I feel like, just naturally speaking, his dedication to data, his willingness to get into the specifics, the fact that he likes to speak quickly and also kind of joke around a little bit. I can model him very closely and be authentic, and no one's going to say you're doing Neil Bawa impersonation. You probably wouldn't have even guessed that if I hadn't mentioned it, but now that I've said it, you can hear it.
Yeah. Because I've had Neil on a few times, and you guys are similar in the sense that you go so deep on Neil is like the data scientist or something to that effect. Right. And he just researches. And that's actually why I think, you're, kind of probably getting on podcasts right now, is just what's going on in the world. And we can kind of pivot away a little bit from the capital raising. That was a little bit selfish just because I was quite interested in it. And, if I get you on my podcast, then I have to ask some questions. Frankly, a lot of people listening will get a lot of benefit out of that.
Cool.
But let's just kind of talk a little bit about, I think interest rates is kind of, the economy, yes, but let's face it, like, people are talking about inflation, they're talking about interest rates, where I don't think there's a question as to where things are going in the very short term, the next 6 months. It's expected that interest rates are going to continue to climb, but I have my own opinion as to where they will be in, say, 12 to 36 months. But because you do so much research, I really want to just give you kind of the floor and talk about whatever you want, because you're doing a lot more research on this than me, and I'm very interested.
Cool. So just for context, for people that don't know me or haven't heard about me before, trust me, I'm trying to do everything I can so that you do. But what he's referring to is that I have a show that I've been able to interview some very high level people on. I don't ever claim to be the source of this data. How could I possibly, if I have the ability to call someone who's credited with inventing the commercial mortgage-backed securities, or a former IMF consultant, like, I would rather them give me great ideas, and maybe I can help repurpose that content so that, like, the audience can enjoy it in a more kind of fruitful manner, because they're like super nerds and I'm like this kind of like intermediary. It's good at communicating, but maybe not the nerdiest of the nerdiest. So long story short, there's a big buzz right now because the yield curve's inverted, meaning the 10-year and the 2-year. Let's just take a second to discuss what that really means. So if you think about an X and a Y axis, bond yields tend to slope up and to the right. So the X axis is time in this example, and the Y axis is yield. The further out the time on the X axis, the higher the return will be, because investors are incurring time risk, right? If they invest $100,000 in a bond, they don't get their $100,000 back until 10 or 20 or 30. You would want a higher return than if it would to be like a 2-year type of situation. So that makes sense in normal times. Every 7 to 10 years, kind of an economic phenomenon takes place where the short-term bonds actually produce higher yields than some of the longer-term bonds, because there is risk from the market's perspective in the short term. And the two that most people focus on is the 10-year and the 2-year. So the moment that the 10-year and the 2-year bonds intersect, meaning that you can get a better deal, higher yield over a 2-year as opposed to 10-year, it triggers, or it signals that there is likely going to be a recession over the next 18 to 22 months, historically speaking. And so that's taking place, or it has taken place. And so there's a lot of concerns about what a recession might mean and what it means for real estate in particular, but that's one of the reasons that we're having this conversation right now. Is it okay with you if I kind of move forward to like what's going on in the market and interest rates and such?
Yeah, absolutely.
Okay. So there's a lot of discussion around interest rates right now. And unlike the inverted yield curve, which is like kind of a triggering, it's a data point. It's something that says like, this might mean this. This is not like that. Interest rates rising is blowing up deals. Like, it's not like some indicator. It's actually happening. I know a $40 million property that just bounced out of escrow because interest rates have increased significantly. So we got to be cautious about what this means, but I think we must put it in context. The reason interest rates are rising is because of inflation and the political pressure that people are receiving because of consumer prices.
Yep.
And there's two different types of inflation, basically. Valuations and inflated values and also consumer prices. These are different things and they act differently and at different times. Usually the first thing that takes place when the money supply increases is valuations increase. The multiple on which the current income is traded increases, meaning that prices go up. Even if income stays the same, the multiple on which that income is traded increases, meaning prices go up across housing, stocks, etc. So that took place, and that takes place in real estate. But the point I'm trying to make is that a lot of people think that real estate is a hedge against inflation. It is if that was the only piece of this that matters. The equity, inflation increases by 5%, equity valuations increase by 5%. It's a wash. Nobody's really in a position to complain or celebrate. Mm-hmm. But that's not all that takes place. The other thing that takes place is that consumer price increase. And so what ends up happening is that as inflation works its way through the financial sector, you see rents rise significantly. You see income rise significantly. But again, a lot of people make the mistake of thinking this is all a wash because sure, rental rates increase, but so do expenses. And they usually increase at about a 1-to-1 ratio. So it's a wash, right? No, here's why. In almost all product types, there is not a 1-to-1 ratio from gross income to net income or gross income to expenses, net to expenses, I should say. Meaning that if the multifamily property that you just invested in had a 50-50 ratio of operating expenses and gross income, it would be a wash. But most of the assets we look at, self-storage in particular, mobile home parks, B-class multifamily apartments, usually the ratio is 60-40 or something like that, sometimes sub 30 in mobile home parks. So what this means is that let's say that rents are increasing by 5% and expenses are also increasing by 5%. You're taking 5% of a small number versus 5% of a big number on the upside, meaning that the net is actually significantly increasing every single year that inflation increases. And the higher inflation is, the more pronounced this is. Does that make sense before I move forward?
It does. I mean, a lot of this stuff, I do multi, or a lot of townhouses, but I also do industrial and retail and primarily ground up developments.
Yes.
And so the challenge there is if I'm doing a 20-year lease with 5-year bumps, that growth is already baked in, right?
Totally.
And so I don't get, now these are all triple net leases. And so I really don't get I'm not getting hit one way or another. So really I'm mainly affected and impacted by what is the cost of construction. It's gone up about 28% on one of my retail projects right now.
Whoa.
Since November. And then what's happening to interest rates, right? Like when we're closing to do 60 townhomes here shortly. And we had a sensitivity of about 1.5 to 2% spread just to see like what could happen if interest rates went up by 2%. Well, I thought that was plenty of gap and room to run these sensitivities. Now it's like I'm pushing up already on that limit. Now, what I have not done is I have not increased my rents because, to your point, that is another variable that I can tweak, but I have not done that. And I appreciate you kind of saying, if expenses go up by 3% or 5% and your rents go up by 5%, that delta is actually probably going to give me a much higher yield on my investment over the horizon. So that's important.
Because net NOI will increase, but also the multiple on which that NOI is traded will also increase when inflation takes place, right?
So talk to me about that, because usually there's like, when you say that, I always think of cap rates, but with interest rates going up, I know that they don't run in parallel with cap rates, but are you seeing are you anticipating cap rates to kind of stay flat, or do you think that are they going to maintain that delta? What's your thoughts on that?
Yeah, good question. So that's a really good question. So this is a question that comes up all the time, and it really doesn't make sense if you look at it in a vacuum. But the thing is, this doesn't happen in a vacuum. Yeah. Interest rates rise when the economy is heating up and inflation is taking place, meaning that you don't see interest rates and cap rates move in lockstep. In fact, they're closer to the opposite of that, meaning that sometimes, like, it's basically uncorrelated is what the point I'm trying to make, but many times interest rates will rise as cap rates are falling, because that's the reason the Fed is raising interest rates, because everything is heating up and prices are high and all that stuff's taking place. So I'll put it this way. I don't see a situation where we're seeing rising and significantly rising interest rates and low employment, low rental growth, low occupancy. I can see a situation when we have high rental growth, high job growth, high income growth, high rental growth, and rising interest rates. Does that make sense? Because if not, it's just a suicide mission on the Fed's part.
Yeah, no, I agree. And so how do you think that will, because I get this question a lot.
Yeah.
And I don't want to go into too much detail because I have some stuff under contract right now, but where do you see cap rates then? Like and no one has a crystal ball, but I'm really interested in your perspective on cap rates as it relates to this environment that we're in today, where interest rates are going up 1.5%. Because I'll just tell you my perspective. So I'm not like baiting you or anything like that, but I've told people, I'm like, look, to your point, this isn't a vacuum, right? When rent grows over time, the value of a property is going to continue to increase, right? Because your NOI. Now, if you're dividing it by a cap rate that is also increasing, then the value might shrink, but you have to look at how much it's growing over what the percentage is that the cap rate is increasing over time. So that's a pretty rudimentary way of kind of explaining it, but how do you kind of see interest rates or cap rates going over the next, say, 12 to 24 months?
Well, okay. So 12 months is a little tough just because it's so short.
Sure. But go up to 3 years or 5 years.
Yeah. I can give you all. I mean, my perspective is that there is an incredible supply demand disequilibrium in the country, especially when it comes to housing, to the tune of millions of units. Depending on who you talk to, 3 to 5 million units in the United States. I know you're in Canada. Just a massive imbalance of that. But there's also a massive imbalance of supply and demand when it comes to demand for investment opportunities, especially favorable risk-adjusted investment opportunities, not just in the United States, but on a global scale. One of the reasons we're talking about inflation is that the central banks all over the world printed somewhere around $10 trillion in the last 2 years. That is a tsunami of liquidity slugging through or surging through, to keep the metaphor, the financial sector, first going into the bond market, looking for yield, compressing bond yields, and then looking at real estate, and then eventually venture capital and NFTs and all these crazy things that we see because people are willing to move up and up and up in risk to, quote, chase yield. Yeah. So I see this massive tsunami of liquidity about to crash, especially on the United States real estate, because of this crazy supply and demand imbalance, the predictability of the legal system in the United States, the fact that cap rates are where they are and cash flow is possible, blah, blah, blah. And so I see cap rates going down and to the right. And I see interest rates, by the way, going down to the right as well. Now, in all fairness, I have been wrong about this topic over the last 12 months. I debated this very topic a year ago, and it looks like I'll probably be wrong. In 12 months, I will have said that they would go down. But I tried to push the Overton window of that conversation because I think people are asking the wrong question. When are they going to go to 4 and 5 and 6 and 7? No, it's when are they going to go negative? Like if you look at the chart over the last 40 years, yes, and you look at the situation from a macroeconomic standpoint, and the United States is one of the very few, if not the only, depending on the numbers you use, country where the rates are actually positive. I see this only going one direction. We do not underwrite to that, but I think that that's what's going to happen.
Like, I think you had this conversation or one of these conversations with Richard Duncan, right? And talking about bonds and can you just, if you feel comfortable, explain why you feel interest rates are going to continue to go down, like into the future, or why you think that could happen?
Okay, so first of all, and this is something that Ethan Pinner suggested I do, if you just search the 100-year interest rate chart, it paints a very clear picture from my perspective. You have a trend down and to the right with a really unique situation that takes place in the 70s, where interest rates spiked, where everyone remembers they spiked to, 17% or so. But other than that, over the last 40 years, people have been asking when that's going to happen again. And nothing can be further from what the reality was, which is they went steeply down into the right. And when I look at the way the political incentives are set up and the fact that the Fed and the political realm are so intermingled, it's very unlikely that Volcker is going to come back, that someone's going to intentionally run the US economy into a massive recession, depression. And I think that a lot of people view Japan as this new opportunity of quantitative easing, meaning that a lot of people are asking, how long can this money printing go on? And it's like a lot longer than most people that are asking that think, because Japan has a 300% debt to GDP ratio, and yet they never experienced 10% unemployment. And so a lot of politicians view that as this new opportunity to never experience a significant correction and not to face, people out in the streets screaming over bread. It's a slow drain of the economy that cripples growth forever as the government siphons money out of productive businesses and into their own pockets, but no one really knows because it's never really pronounced. Does that make sense?
Yeah. I'm in Canada, and so we're seeing that, on a more rapid pace, if you will. And
I see.
But yeah. I saw something come out recently where I'm going to pivot a little bit here, but it's still on this topic because I believe it is anyways, that you are now involved in crypto or Bitcoin. Is that true? Because I just kind of read the email high level real quick. So I thought that was interesting because you're a pretty open-minded guy, right? Like you're looking at different opportunities. I know you're ATM, so that you're not just in real estate. You kind of have a broader view of various asset classes and whatnot. And I'm curious, like, what is this isn't a pitch or financial advice, so neither Hunter or I giving you any kind of investment guidance here. But is this a Bitcoin? Like, are you investing in Bitcoin, or is it mining of Bitcoin, or what? Just describe it a little bit and why.
Yeah. So we basically, what we do as a company is we find operators in various niches that specialize in that particular niche. And we feel confident across multiple niches because you start to see the exact same things come up across various niches. Mm-hmm. So, we're experts in identifying compelling investment opportunities or deals that we find compelling. Yeah. And then we have an investor base that's kind of used to our system and process for conducting due diligence. Okay. And so as far as Bitcoin mining, I am not the expert in Bitcoin. That industry tends to attract, when I say nerds, like there's people listening to this right now that know far more about Bitcoin than me, but they likely do not know much more about Bitcoin than the sponsor that we're working with. Mm-hmm. So we find some really proficient, well-positioned sponsor in that space that has relationships with publicly traded companies and joint venture partners that are billion-dollar firms. And the economies of scale creates this really compelling opportunity. We can actually invest in the miners and receive the distributions as Bitcoin is mined. And you can get the potential benefits of cash flow as Bitcoin is mined, as well as massive depreciation benefits for owning a machinery. So yeah, if you want to learn more about that, you can go to asymcapital.com and a bunch of information is there.
So do these opportunities, are they pulled to you because of your platform and your presence, or are you actively seeking? Like, I'm curious how you're, and it's probably changed over time, right? Because a lot of people know who you are now. And so I know even just with my, small podcast, I do see a lot more deal flow, but is that how you are sourcing some of these opportunities? Or, and so that's question one. And then question two is like, how then do you evaluate the people that you invest with? Because that's, you're a steward of others' money. And that is, I know something you take very seriously. So I'm just kind of curious how you kind of manage those two things.
Yeah. So sorry, could you repeat the question real quick?
So the first question is like, are you attracting people that are pitching you all the time? Yeah. And then once they pitch you, how are you evaluating them?
So we're almost never looking at deals that are sent to us. It's always outbound because we just have, there's too much volume. Yeah. of things that we receive. In order to work with us is very difficult. And so almost no one really meets the criteria that we require. So we don't even, I mean, if I see a deal, I don't even open it because it's just, we have too many things on our plate. So the way that it does work, if you're, interested in working with us, we usually find out about you through investors that have had a good experience. And we have a due diligence process, which is pretty robust, which includes, obviously criminal checks, background checks, et cetera, but also verification that you own at least $100 million worth of real estate or whatever particular niche you're in. And then, we only have like 6 partners that we want to work with for the rest of our lives. And hopefully those 6 will stick around, but every now and then they make a turn where we wanted to go left and we'll have to find a new partner. And if I could find 10 people that I could, invest tens of millions of dollars with, that would be perfect business. So we probably have 6 now, and hopefully we'll, continue to work with those people forever.
Nice. That's I like that business model. I can see, I'm curious, did you intentionally go into the raising capital and not doing the deals for yourself because of its ability to scale? Because I'm seeing it in my own business model. And so part of this is a little bit of therapy for Shane, but I think there's enough people out there that when I talk to them, that they run into a ceiling, if you will, right? Because at a certain point, you either need to really build out a team.
Yeah.
And then you have to ask the question, like, is that something I really want to do? Right? Do I want to have 20 people on a team? Do I want to, create a fund? Do I, or do I want to stay doing 2 to 4 deals a year? And you still have a good, size portfolio, but
yeah,
you're a very intentional thinker. So how did you come up with your strategy, I guess?
So a couple of things. I appreciate the compliments. Number one, raising money is the single most lucrative skill in the world. So if you want to think that I'm lazy, that's totally fine. And a lot of my teachers did too. But I just kind of identified that as being the reality, and using real estate as a vehicle because the predictability of outcome is very high. And all things kind of being accounted for from my perspective, it is the best vehicle. And then raising capital is the best skill. And so if you match them together, it's like super, super scalable, super lucrative, and, cash flow depreciation, passive, blah, blah, blah. So I wanted to focus on the most direct route to accomplish the things that most people want to accomplish. And I just, because of the laziness or whatever one you want to call it, intentionality, a lot of people have the same financial goals, but they don't really build their life around achieving those goals. So I think a perfect example, we've all talked to people about what they want to do and what they view as financial freedom. Yes. And it usually means to have their passive income cover their monthly expenses, but their portfolio is like only in Apple stock, getting like no dividend. So it's like, well, that's you're going to have $70 million in order to achieve that goal. Or you could, focus on, ATM machines that produce like really high cash flow. And then you could get that done in like 3 years, So, I built my business to be super scalable, to focus on the one thing that I wanted to do. And when you start to get to a level, we're probably going to raise $40 million this year. You're going to have to build out some team members so that you can stay within your unique ability. But the closer I've gotten to the operations, the more challenging it's been, because that's not my unique skill set. So if I wanted to bring on a partner that was exclusively focused on operations, perhaps we would found our own multifamily firm, for example. But I really like being diversified. And so that's the service we provide to our investors.
So, okay. Thank you for that. And you said something, and when I was coming up into the world of commercial real estate, my father-in-law said finding deals was like that was his skill set, if you will, right? Yeah. He kind of said, you know what, Shane, you find a good deal and we'll raise the money, type of thing, right? Like that was, and I know that there's some people that a lot of commercial brokers that I speak with, right? They're like, oh, I find these amazing friggin' deals, and yet they can't raise money, right? They don't know how to raise money. So how did you determine that raising capital was the skill set that you needed to master, not finding great opportunities? Because I think some people would debate that, right? Like, I mean, I'm on the fence. Like I see, like it's chicken and egg. You can't have one without the other, right? you're able to find deals because people are sending so much to you. You have like a tremendous pipeline, which
Right.
That's very appealing to me, because I know how much effort goes into finding opportunities. And frankly, one of the reasons I talk about raising money and whatnot is because I want people to say, hey, Shane, I have a deal. Would you look at it? I don't have the same problem as you. I don't see too many deals. I see enough, which
Yeah.
keep me busy. But anyways, back to the question of how did you decide between the two?
Okay. So this is really awesome. And I just recorded a 10-minute video about this.
Okay.
And I think we're going to get you off the fence during this conversation. So a lot of what raising money is about is marketing. And so I need to be very dialed in terms of what my audience is listening for and saying, and where their pain points are and all this stuff. And like everything you just outlined. Another part of marketing, by the way, is throwing rocks at your competitors. And so I'm about to do all of it, right? No holds barred. Sorry for anybody that comes on before or after this. If you hold opposing views to me, we can debate it, but there's no point.
Yeah.
So as you know, we have a mastermind for capital raisers, and that's all we focus on is raising money. The name of the mastermind is Raise Masters. Yeah. And we don't talk about finding deals. We don't talk about finding markets. We don't talk about underwriting. We don't talk about finding brokers. We don't have to talk about how to get brokers to take you seriously. All that doesn't matter. It's almost useless. And there's so many real estate coaches out there that focus so much on like finding the deals and what paint to use and all this stuff. It's honestly kind of ridiculous because, man, if you can come up with the money, it all comes to you. Everything I just outlined is downhill of that. So listen, everybody listen to this right now. Whatever current level you're at, the thing that's holding you back from getting to the next level 100% of the time is the amount of money you can bring to the table. That's it. I can say that with 100% confidence, no matter what level you are at. So if you have only done, single family fix and flips, and you haven't yet done a fourplex, or you've done a fourplex, you've never done 200 units, or you have 1,000 units, but you don't have 5,000 units, it's because you can't click your fingers and make 100 grand appear, 10 million appear, or 100 million. And once you can do that, by the way, you don't have to figure out how to underwrite deals. You can hire the best underwriters in the country. All the brokers start calling you. You start doing transactions like $40 million transactions. It's all downhill from there. So what we do is we focus exclusively on raising money with one caveat. If you raise money and you don't know what you're doing, you're going to have a bad time and you have a very short career. But we do not let people in our mastermind that don't know what they're doing. This is not for beginners. This is like, you want to pour gasoline on the fire. If the fire doesn't work or the fire's in the wrong house, you don't want to pour gasoline on it.
Okay. Hearing you kind of explain that has definitely, shifted my perspective, because you're right. I mean, the reality is, I'm just going back even when I was a broker, right? We would take deals to people that had money that would close. And frankly, there was a group of people back when I started back in kind of 06, 07, and they were like the first syndicators. They would overpay. They had buckets of money. Now, I think that some of them abused it, and they kind of gave syndication a bad name. But if they applied, to your point, the correct principles and right morals and all the rest of it, and weren't so short term, they could have had tremendous careers and portfolios of real estate, if you will. And it really was. It was kind of like you look around and say, who has the money? Who's going to close? And if you're known now, is that part of the secret too, is being known? Because let's say you have a lot of money, but no one knows about you. Then that seems like it would be a bit of an issue itself.
Totally. But one of our clients, I've got to tell a quick story about this person, Ellis Hammond, who you may know, and maybe you should have him on your show if you haven't. He's got an incredible background. 3 years ago, he was a broke college pastor with no money, no income, no real contacts in real estate. And someone that was a partner with him, also broke college pastor, came to him and said, hey, look, I need to borrow some money for food. And Ellis was not in a position financially to help that person. It's like, dude, we're in the same position. So he kind of recognized, I need to make a change and start doing something that's going to put me in a better position. and, hired us a couple of years ago as an introductory coach. And then we ended up working together again. He's a client of ours at Raise Masters. He just bought a $40 million property in a prime market in submarket in Dallas. And so when that happens, everyone knows about you.
Yeah.
If you go and buy some trophy asset, it's all just
you're on the radar.
Yes.
Immediately.
There's
just
6 brokers in every city and they all know you now.
Yeah.
That's it.
Yeah. Such a good point. Hunter, I want to be respectful of your time. Where can people go to, aside from typing in Hunter Thompson, they might find the, the actor, right? So what's the best place to go and find out more about you?
So I usually don't do this, but because we talk about like a bunch of different topics,
Yeah,
I'm going to give you 2 different places to go.
Okay, perfect.
So if you are interested in like raising capital, just go to raisingcapitalforrealestate.com. And I've got a book that basically has every secret I know about raising money. If you are interested in investing passively, or you want to know what my view is in terms of how to navigate this economic climate, we have a very cool summit coming up. I think I mentioned it, but it's the 100K to Invest Summit. So if you go to 100, the number K2invest.com, it's a free summit. You should definitely upgrade and do the VIP thing. You get access to all the recordings and you get access to direct access to me and all this cool stuff. But yeah, 100K2invest.com. And we're going to interview 22 experts of various niches: Bitcoin mining, mineral rights, self-storage, mobile home parks, office, industrial development, low income tax credit, all of it, to figure out what's going to work in today's environment. And I learned a ton during these sessions. So go there and register. It's free.
Absolutely. And just as a testament, I've purchased some of your previous events, and I can tell you, you bring in some incredible speakers. So
thanks.
Absolutely, my full recommendation to go check that out. We'll put the links in the show notes. Hunter, it was a pleasure. I appreciate you coming on. This was a great conversation. I was quiet a few times because I was actually taking notes, and when you're changing someone's belief system around something, that's a pretty substantial thing, especially in a 1-hour podcast. So appreciate you.
I appreciate the opportunity.
You bet. Thanks.